Yo, we are back with another one. We're going to teach all of you people how to trade. At the end of the day, that's what you're here for. So I'm going to make it very sweet and concise and give you the core of it. Look, making money in these markets, as I always say and will continue to tell you everyone, is not complex. All you need to understand is overall market direction and know how to trade within that direction. If you can do that, you're pretty much good to go. Daily time frame on gold is bullish. Look, this is not complex structure. Price goes up, comes down, goes up, comes down, goes up, comes down, goes up. So higher highs and higher lows. Up, down, right? So all we need to know, this is the trade that I took yesterday, so this candle had yet to form really. But we need to know is that daily is bullish, right? And then that means that we expect market to continue higher, right? And then we scale down to the 4 hour to see what's going on there. And 4 hours also what? Bullish, because what can we say here? Price was bearish, right? Here, it made a bearish leg. But then price came in here, made a new low, and then made a new high. So what do we call that? A break of structure. It's been marked out right here. So now that price has broken structure, we need to take just a few more things into account before we can really start saying that we are good to go long, right? One, we need to identify if price is pricing efficiently, and if it's not, we need to expect a pullback. So how can we check that? We scale down a little bit more. But mind you, we just said that the 4 hour and the daily time frame are pretty much good to go. So what does this look like on the hourly? The hourly time frame is pricing efficiently. Price goes up, down, up, down. You have no massive legs that have formed. Everything is pricing within equilibrium. So what that means is price going into discount, then back into premium, discount, and back into premium. So we can anticipate a continuation move without needing to go back into a discount. Does that make sense? So what else do we look at? Coming into session open here, hourly structure is also bullish. You can see here another break of structure on the hourly. Hourly structure broke out here, continued. We swept liquidity. We faked a break of structure right here, as you can tell. Because at some point, this candle was fully black, right? And what happened? Wicked and turned into a wick. That means that this candle swept liquidity, faked people out into believing that price was bearish, only to go ahead and break structure to the upside. Now, what else can we say? Hourly structure is bullish. 4 hour structure is bullish. Daily structure is bullish. Now what do? Scale down a little bit more. Because all we're looking for is for what? The time frames to align. Because if you have time frame misalignment when you're going to be gambling, in other words, trading, you'll notice that market may switch directions on you because you don't want to get caught up in this 15-minute downtrend, right? You don't want to be longing within here because you know that the overall direction is up because you will get stopped out. But if you know that everything is trending higher, trying to find a place to long now becomes a matter of knowledge of liquidity and where price is going to change character and continue on. So if you know that, you're good. You're pretty much golden from there. So we've established that the 15-minute, the hourly, the 4 hour, and the daily are all bullish. So at this point, coming into market open, really all you want to see is what? 15-minute bullish. I just want anything that says 5-minute bullish and 1-minute bullish. But one thing that we need to emphasize that I always tell you guys. So when we're about to execute on these low time frames, what we need to do is protect ourselves from what? Liquidations. So what does that mean? We need to wait for a bearish liquidation to enter. In other words, usually on the 5-minute or 15-minute, it looks like a bearish candle. But if you scale down enough, you'll notice the trend shift on the lower time frames before it expands higher. So at this point, we scale down to the 5-minute, right? And what does the 5-minute do? Exactly that. 5-minute decides to break structure. So 5 minutes no longer valid coming into market open. What happens at 8:05? At 8:10, we break structure, right? But there's this 5-minute low that was made here that gets swept out. And we're still not good to go to trade this. Look, this right here is just saying that price just went bearish on the low time frames. So yes, on the higher time frame, we're expecting an expansion, but we still don't know for sure this is the time. So what do we wait for? We wait for the invalidation of the bearish structure that's being built, i.e. the 1-minute time frame. Make sense? So once you go on the 1 minute, all you really need to do from here is pretty much look at a few things. Because what's the